Hey everybody, this is Jim at SP500chart.com. It's a few minutes after 4 o'clock on Sunday afternoon, November 24th, 2013. And we're going to take a look at the S&P 500 chart as we do. And this is the weekly review where we look at the week in general. And then we also look a little bit more closely at what happened on Friday. And I want to also just remind you that if you are not a subscriber to SP500chart.com, then you have to wait until the weekend to see all of the videos that were done throughout the week. And that would include the video released after the close on Monday, Tuesday, Wednesday, and Thursday. In other words, if you want to see those videos in a timely manner, then all you got to do is sign up for the subscription, and you get those. And the reason I do it this way is very simple. Everybody gets to see every video. You get to decide whether or not these techniques are worth anything whatsoever. But then, if you decide yes they are, then you can decide whether or not you want to incorporate some of these methods in your own analysis of the markets. But you would do that by subscribing. Here's the catch. Well, I'll tell you what. I'll tell you the catch midway through the video. Let me remind you before we do that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's do that. Okay, we're starting out here looking at a daily chart where each candle is 1 day of trading. And I think this is kind of helpful for us to get a little bit of a feeling on what's going on here. And this isn't a weekly review. This actually is going to go back about a month or so. But I just want to remind you that when we got over this line right here, because this line really is not moving up at a very steep slope at all, my question was, and I think we may be seeing kind of the answer now, and it was an honest question. If this had been flat, then I would think we would have a pattern where we could get a target from these three dips, but it wasn't flat. So we really can't do that quite as reliably. But I think this line is flat enough to where we know that getting over this particular line is something of technical significance. You can see we got over it, back tested it on that second day, got over it a little higher, came back tested it again in early November, and then we are now significantly over that line by roughly 50 points in the S&P. So it just looks to me as if this line now should probably be considered a support line. Since we've taken it out and back tested it a couple of times already, we should get support here. Now, can we use this line and measure a target? I think that would be kind of a dangerous game, to be frank with you, because if we did that, we may, I fear, get a target measurement that's just not realistic. If we were to do it, I certainly wouldn't go with this deep dip right here. If somebody were to press me and hold a gun to my head and say, measure it, then I would say, well, let's take this second dip right here and let's look at where we broke out, and let's say maybe we could be looking at something around 1840 or 1850. And I'm pretty cool with that because I kind of think that's where we're going anyway. Because we've got some resistance lines up here. We are above all of our support lines. We don't really have any resistance line in the near future other than maybe what we would see out of this channel, which I'm honing in on right now as I speak. So this line's probably resistance, but if you look at that line is really rising at a pretty good clip. So I rather doubt. Well, before I say that, maybe, but it just seems that if we do approach this line, it may be at about the same time we reach up to that 1840, 1850 level, at which point we would be looking at one of these lines to turn the market back, and not necessarily this one. Does that make sense? Let me back up and say it another way. This is resistance. This would be resistance, and yeah, this would be resistance too. But I just don't see the market putting on 26 points on Monday to tag this line. Maybe we could get to it in a few days or in a week or so. But all that, let's now do our little weekly thing where we look at what happened in the week. And to help us do that, I'm going to highlight what the week consisted of. Okay, our week is now highlighted here in this little pink box. So what I think, let's take a look. When we came into this week, we knew that we had been following this little rising support line right here Thursday and Friday of the previous week. And I didn't think that weakness Monday, Tuesday, and Wednesday was anything really out of the ordinary, because we had this touch, we had these two touches, we even had this late day rally, I believe, or was that? It's hard to tell on this chart whether that was early Monday morning or late on Friday. What is it when it's on the line? I guess that was Monday morning. But anyway, we had this line on the chart as a resistance line, and even though that got a little bit above it, we quickly got back to that mark, and then the S&P started to sell off. Tuesday and Wednesday, we just kind of followed it with the idea that we may be in a bull flag pattern. And originally, the flag pattern had a shape that was more like this, I believe, because we had a few touches. As a matter of fact, it was exactly here, with the idea being that if once we got over this line, that should set up a new and renewed leg up. Now, what took place on the 20th, on Wednesday, was the day that the Fed released their notes, and that threw the markets into a tizzy. We ended up closing underneath this support line. Now, keep in mind, there are a lot of people who simply refuse to touch the markets. If you're a day trader and you trade the S&P futures or something, there are a lot of people who just say, on a day when the Fed makes a statement or when notes are released, I don't go there. I just stay away from it. And the reason is, they say, because there's just too many head fakes, too many things happen that introduce a sense of volatility. And interestingly enough, I'll throw this out there with a big caveat. And the caveat is, I just heard this. I don't know that I've not tested it. I've not gone back to see if historically if this is accurate. But I've heard some people say that the initial reaction you get on a statement from the Fed is usually the wrong reaction. So in other words, if the Fed makes a statement and there's an immediate rally, well, that's probably setting up a decline. or if they make a statement and the initial reaction is to the downside, it's probably setting up a rally. I have not tested that, but I've heard it. I'm interested in your comments. So anyway, look, here's what happened. So it's kind of true to form. On Thursday, the S&P rallied. We got over this top resistance line, which I altered. Okay, I ditched this line and went with the one that is now on the chart. And you got to do that sometimes. It is kind of interesting to note that if we go with this line from this top across these two tops right here, that actually ends up being, one interpretation is, this was a flag here, this was a breakout, and this was a pullback to that broken resistance line. But you know, I'm going to go with this instead because that is a little bit of a stretch. So on Thursday, we rally back, get above this line, get back into our channel, and then that move is continued throughout the entire trading day on Friday. And we also may be looking at, and we talked about this after the close on Thursday, we may be looking at another one of our inverted head and shoulders patterns here. And like so many of these that we've seen over the past probably 5 or 6 months, we didn't really get a right shoulder. So from the depth of this pattern, from this resistance line having now been broken, we measure a target of a little bit over 1815. So that's what I'm ending the week with. I'm ending the week with an 1815 minimum target based upon what we got going on, what we had going on well, pretty much Monday through Thursday. So this looks like we had a bull flag that got a little bit underneath our support line on the Fed volatility, and now we've broken out above this flag, and the natural thing to expect from this pattern would be a move up to an expected level of resistance. And like I said, the levels of resistance that we currently show in the chart are this green line and this red and purple line. So if we were to tag the green line on Tuesday or Wednesday, yeah, I would expect this to bounce back a bit, but I would also not be the least bit surprised to see this channel end up taking us to this red line here, which by Friday is approaching 1860. So guys, let's see if that's what happens. This is certainly interesting. We are in, I don't want to say uncharted territories, but really as we get into an area where we begin to set new highs, it is kind of difficult to say, well, for example, we don't have any gap resistance, okay, because since we're setting new highs, obviously there's no gaps that, quote, would be filled where we would expect resistance. We don't have a whole bunch of patterns other than this little one back here or this one right here, and this pattern we can expect about another 10 to 12 points out of this little one, but this one back here has already met its target when we got to 1802, which, by the way, was a success story that we started the week right out with on Monday. So, folks, let's just look at this channel with the idea that let's see if we are indeed back into this channel with a renewed vigor sufficient to get us back up to test this top resistance line, or if we don't do that, fairly quickly this week, at some point do we reach this red line, which should turn the S&P back for at least an intermediate downtrend. And again, to remind you where that line comes from, that's the red line right there. We got to go back a ways, and you see that that line has its genesis. Hold on, let me adjust the chart. As I was saying, now that we're looking at a 3-day chart, that line has its genesis on these two significant tops. They were put in more than 2 years ago. That line extends on up. We have not reached that line in over 2 years. Interestingly, that line is also almost perfectly parallel to a line where we have put in 3 significant bottoms. I say significant, I mean they weren't hugely significant, but they were bottoms that show technical significance with that line. You'll see we ducked underneath this line back in the fall of 2011. And from that line we have another support line, which is this blue area right here, which will probably come into play, I would think, in 2014. But I think right now it appears that the market is intent upon reaching this red line at some point down the road. It just looks that way. So guys, there's your video for the week ending November 22nd, 2013. And I just want to remind you too, if you subscribe to SP500chart.com before the end of the year, you will get the current rates. January 1, the rates are going up. Going to go up about 25%. So if you want to get a little bit better deal, now's the time, or sometime between now and the end of the year. And I want to thank you for watching this, and I especially want to thank those of you who are subscribers. I do appreciate it very much, and I hope you feel that it's an investment that is worth making. Take care.